technical analysis wise, we're kind of just in a good spot, right? We're not really overbought on indicators. We're still on a good, strong buy signal. One thing I've been talking about a lot in our daily market commentary this week is about money flows. If you really want to know where the markets are going, pay attention to money flows. And money flows have been very positive. Even during the whole DeepSeek thing on Monday, money flows were positive.
Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart, welcoming you back here at the end of another week, featuring a weekly market recap with my good friend, the jurisprudential portfolio manager, Lance Roberts. How are you, Lance?
I'm very good. Jurisprudence. This is a term I did not expect to be labeled to me.
Well, you may remember last week we didn't get a chance to get to the rant, which was going to be about jury duty. So I'm trying to put a stake in the ground that we're going to get there by starting off with it. That said, folks, today is going to be a shortened weekly market recap. That's on my side. I am participating in Substack's first financial summit ever. So I'm interviewing a couple of folks live today on the new Substack Live platform right after Lance and I finish up here. So Lance has been kind enough to get up a little bit earlier, record this with me, and then let me get onto that. So those discussions should be great. I'm going to be interviewing both Danielle DiMartino Booth and Kevin Muir of the Macro Tourist. If possible, I'm going to bring as many clips or as big a part of those interviews as I can on here to YouTube at some point in the coming weeks. So keep your eye out for those. All right, Lance, but look, kind of a boring week, huh? Not too much happened, right? We only had, Federal Reserve update. We had earnings from the Mag 7. We had a massive curveball thrown at the world right before the weekend with the China's release of the DeepSeek AI platform. We had 212,000 executive orders. So trying to figure out where to start here. What is interesting is, there was a lot of uncertainty thrown at the markets, and they did just fine, right?
Yep. And what's really great is this, and this really goes to the context of having a well-diversified portfolio that helps you kind of weather these type of events when they occur. And so just as a good example, about 2 weeks ago, we talked here, you and I did, that we had reduced our position in NVIDIA. We didn't know DeepSeek was coming, right? But the stock was really overbought, near all-time highs, deviated from means, and so we reduced that position in our portfolio. And we added to AMD at that point because it was deeply oversold. And what was very interesting is that during this week, NVIDIA had a big drawdown earlier this week, which was really expected. Again, the stock was very deviated from the 200-day moving average. You're going to get corrections back to that. Sometimes it happens slowly, sometimes it happens quickly. This was a week it happened quickly, but technically nothing's wrong. And in fact, NVIDIA just formed a massive hammer candle day before yesterday. So that's pretty much a good sign that probably the bottom is in. Money flows are turning positive. If you're interested, if you go to my Substack page, at Lance Roberts on Substack, I put out a daily market we do a daily trading update on markets every day. And on Substack today, we went through a daily, weekly, monthly chart of NVIDIA. And there's some good, bad to that. Short term, it's probably a decent buying opportunity. Longer term, we may be dead money here for several months to several quarters, maybe even a year or so, as it digests this massive run up it had over the last year. But one of the interesting side notes of that was that of the last 10 largest market cap drawdowns by any stock in the index, 8 of 10 of those have all been by NVIDIA. So if you had sold the stock on those drawdowns and gotten out of it, you would have missed all the gains in NVIDIA. So it's very important, and this is why. And this goes back to the point about diversification. We had a massive rotation. You and I talked about last week. We were looking at the rotation charts that we have on Simple Advisor and saying, hey, here's some sectors that are really, really oversold versus these sectors that are overbought. Look for a rotation for this to occur. That's exactly what happened on Monday. Tech stocks got hit. Procter & Gamble was up huge. Walmart was up big. Costco was up big. All the stocks that have been out of favor suddenly were all in favor. And so as an example, our portfolio was down 14 basis points on Monday, while the market was down almost 1.5, and the NASDAQ was down 3. So that's the beauty of having diversification, playing, understanding these rotations that occur in the market, not overweighting positions in your portfolio, managing those allocations. It'll help you weather that storm. So now we can step back and say, what's the next opportunity? Where can we allocate some money? What can we do with the portfolio? And so again, now there's opportunities if we want to add back to NVIDIA. I'm not saying we are, but just if we wanted to, we have the capital and the ability to do that now because we've already done that work in the portfolio.
Yeah. Well, congratulations. And this is where, all the time-honored portfolio management strategies that you talk about really come into play. So that you're living by your gardening rules in real time here for folks. Again, big reason why I have you on the channel here so that folks can watch a capital manager think and react in real time, plan, think and react in real time. Just in case, for the few folks that maybe don't know what basis points are, you said that you were down 14 basis points. Then you said the market was down over 1.5. Just want to be clear, you're comparing apples and oranges there. The market was down 1.5%, right? Which is 150 basis points versus the 14 you were down, meaning you were down a small fraction versus the regular market.
Right. And my apologies. Yes, sometimes I
no, it's okay. It's my job to clarify for the regular person. I just wanted to make sure that folks weren't interpreting it the wrong way. They should interpret it as, hey, Lance really protected his portfolio with his diversification. All right. Well, look, there's two important directions I want to take the conversation from here. One is, we've been waiting to see until we got to the earnings for the Magnificent Seven. We pretty much now have them all, right?
Except for NVIDIA.
Okay, so thank you. Except for NVIDIA.
NVIDIA, and this is the trick. NVIDIA won't report earnings until February the 20th, somewhere around there. I don't have the exact date, but it's right around the end of February. So yeah, it's a long lag before we get the one that everybody's watching, right? So we won't hear from Jensen Huang, the CEO of NVIDIA, anytime soon. He's going to be in blackout shortly. He won't be able to make any comments ahead of earnings. So again, what NVIDIA's response is to the whole DeepSeek issue, we won't know for another month.
Which might be good for him, to be honest.
Could be. Yeah, absolutely.
All right. Well, look. So, but we do know at least the other Magnificent Six.
The other six.
We know them. So I want to get I want you to update folks on what we know so far. And then obviously we want to talk about some of the threats or some of the questions that DeepSeek asks about the market's future, because as we've talked about many times on the program, so much of the global equity market is concentrated into these AI stocks, right? So I guess first let's start with just, okay, so what has earnings seasons told us so far about the Magnificent Six?
So kind of interesting, actually. Microsoft had really good numbers across the board. Revenues beat, earnings beat. They were a little bit soft on their data center revenue. So they have the Azure cloud. So that's their data center. They only grew that at 31%. Now, this is the problem with the market, is that, back in the day before we had this real-time information, we knew everything every second, which really isn't good for investors. It'd take 2 or 3 days to get that news, right? You'd look at Microsoft and it's like, yeah, their revenue grew for the data center 0.5% less or 0.25% less than what was expected, but it's still growing at 31%. A company the size of Microsoft growing annual revenues at 31% is astronomical, right? I mean, that's just, you're just printing money literally through the data center business that you're doing. But we're so tied to these numbers now, the immediate knee-jerk reaction. Of course, Microsoft had already had a decent run going into earnings. The immediate reaction, the stock sold off by 5%, but it's recovering since, because people are now starting to step back and understand what those numbers were. Tesla, on the other hand, missed revenues. The stock was up because Elon, being Elon, you kind of got to love Elon, right? I mean, he's the P.T. Barnum of our generation in some ways, because he's such a good marketer. He came out and he said, hey, you know what? I see Tesla being the larger in terms of market cap than the top 5 companies combined in the future. I see a pathway for that. And of course, everybody bought that one, right? Because now Tesla's viewed as a technology company. And look, he's doing some great stuff. I'm a huge fan of Elon. Anybody that can do what he's done and the stuff that he comes up with is just kind of mind blowing that this one guy's thinking of all these things from SpaceX to Starlink to Neuralink to, whatever. Don't know what an Optimus Prime robots, all these things. So you got to give credit where credit's due, but there's a lot of overvaluation built in that company. But again, investors are just really kind of bypassing things and looking at headline events. So this is the takeaway. Apple had, but let's talk about Apple. They reported earnings. Earnings growth was okay. Phone sales were down 11% in China, but Apple's not really growing revenues. Their revenue grew at 4%. Stock was up 3% yesterday. It's the largest market cap company in the world right now. And so, again, people are just really, kind of just bypassing what's going on with earnings and fundamentals and just looking at headlines and then making portfolio investment decisions in their portfolio based on these headlines. So the key takeaway, and NVIDIA is a good example of this one because of Monday, is that the immediate reaction to the news from DeepSeek was, oh my gosh, this has changed the landscape of the world for, AI. Did it? We don't know. There's so many things that we don't know about DeepSeek, and stuff is still just kind of coming out that it may or may not have changed anything. But now you've sold this position on a knee-jerk reaction, down 15, 16%. Stock's up today. And you've made a decision, a portfolio, not based on any type of real rational decision making. So and this is where we go back to talking about managing risk in your portfolio and not getting emotionally driven to make changes just because of a headline event. Markets react so suddenly. So the headline hits, and immediately as soon as the headline events, you and I have talked about these exogenous events that occur in the market, these unexpected exogenous events. So everybody's on one side of the boat, right? Regardless of what it is. It's Tesla, it's NVIDIA, it's Microsoft, it's Apple, it's AI in general, whatever. Everybody's on this side of the boat. Everybody's convinced this is going to happen. And then this one event comes along that nobody was expecting. And everybody, all the buyers were out there and go, oh, I'm selling now. Problem is there's no buyers. The buyers are over here. And NVIDIA, they were 15% lower. So the stock opens down 15%. Now you're trapped because of this emotional swing in the market. All the algorithms kick in, the hedge funds, everybody, they're dumping stocks overnight before when you can't trade. So your only option is to sell at the open. So you make this emotional knee-jerk reaction to sell something open. The problem is now the stock's deeply oversold. Sentiment's grossly negative. And this is where you've got to start making real rational decisions in your portfolio, saying, okay, look, market's oversold here. What's the real news? What's the fundamental impact? Let the stock rally back a bit, which it's going to do. And then you can come, and in fact, the next day, the stock was up 9% the next day. So had you sold at the open on that news, if you're waiting one day, you could have sold 9% higher in your portfolio. So, so this is the important thing about managing your portfolio, managing risk, is not reacting to just every piece of headline news, because on Monday, nobody knew crap, right? There's just all these headlines coming out. Zero Hedge was the absolute worst about spooking markets and spooking investors. I can't tell you how many people email me articles from Zero Hedge. And look, I'm not opposed to Zero Hedge at all. It's just every single article on Zero Hedge in the morning about NVIDIA and DeepSeek was all negative. There wasn't a balanced opinion about what was coming out. It was just immediately all negative, which just scared investors to make an investing mistake in their portfolio. Now, later in the day, about 2:00 in the afternoon, Zero Hedge posted an article, I think from Bernstein, saying, hey, wait a second. Here's what's really kind of going on. They didn't develop this for $5 million. It's only 90% accurate. And they started kind of listing all some of the early flaws that were getting caught in the white paper that came out. But again, it's too late. Now you've already sold at the low of the day. And then the next morning, the stock's up 9%. So this is why it's very important. And in fact, on Monday's YouTube podcast, I said, don't do any, we do a podcast every morning on YouTube before the market opens. And I said, don't do anything today. In fact, best thing to do today is turn off everything and go fishing. Go do something else. Do not even pay attention to your portfolio today. Tomorrow, we'll figure this out, right? And we'll start looking at, kind of where to position and what to do next. And that was really good advice if you had done that, because it would have saved you a lot of money.
Okay, so well said, and validates a lot of discussions we've had on this channel over the years of not trading by headlines, not
Right.
letting your emotions drive your investing decisions, especially when you feel really compelled emotionally to pull a trigger one way or the other. It's usually a sign it's probably going to be the wrong decision to make. So yeah, just go fishing and let your emotions calm down, let the dust settle. But let me zoom up to a high level if I can.
Sure.
So everybody, so both you and I, on Monday, I put out a pretty, deep dive recap of what we knew at the time about DeepSeek. I think you did one very similar on Tuesday. So if folks
Yep.
want to learn more about, kind of the facts on the ground as best we understand them, feel free to go watch those videos, folks. But, a lot of concerns. But if you look at the market's action since, collectively, kind of a nothing burger, right?
Yep.
S&P is back up above 6,100, and we're going to go through the technicals, but I'm sure they're not, blaring warning klaxons right now, at least. Now, NVIDIA still has some repair to do, but collectively, the Mag 7, seem to be doing just fine, hanging in there. But let me ask this question.
Sure.
So I won't put it up because I put it up on so many videos recently, but you've seen that meme I created of the elephant on the beach ball held up by the ants, right?
Right. Right.
So we have this, I would call hyper concentrated global equity market resting on the shoulders of these very few companies. Those companies have had a tremendous amount of growth in their market value on an absolute basis over the past recent years, fueled by hopes of AI, right? And you and
Right.
I have talked about how rich and extended valuations are right now, and how some of these companies aren't even priced to perfection. They're priced to whatever's better than perfection. So in theory, uncertainty in the AI space should require a discount factor, right? Because to your point, we just don't know. There's still a lot of things about the long-term implications of DeepSeek that we don't know. But prudence would just caution the intelligent investor to put in a discount factor. Hey, I don't know enough about what's going to happen in the future now. And a modeler should be, their argument should be, how much of a discount factor should I be putting in now? That should probably be the debate. With the exception of NVIDIA, there doesn't really seem to be that much of a discount factor being applied here, and there certainly doesn't seem to be one on the whole with markets. So I just want to get your thoughts on that, because yes, there's still a lot we don't know about DeepSeek, but there are some pretty big questions that are remaining unanswered right now that, again, nobody knows the answer to. But will the global AI build out now require substantially less capex, right? And if it does, that's really, really going to continue to hurt companies like NVIDIA. Does this open the door for more ubiquitous, more cheap AI services, which could potentially hurt, companies like Microsoft and Google and some of the other, AI platform providers? I don't know the answers to that. I'm not a technologist. I don't know anybody necessarily knows for sure yet, but there is uncertainty around that. And I am looking at the markets just thinking, man, it definitely seems a little overconfident to be pricing essentially a 0% discount factor in now that we have this new uncertainty introduced.
Right. And again, there's, the argument you're making is completely logical, right? And if we had a logically driven market, and we used to have one of those, by the way, pre-2000. So if we had a market that traded on slower information, and because you had slower information flow, that you would have to actually focus on fundamentals, then yeah, it would be very logical that you would trade at some type of a discount relative to what you would think. But since we no longer have those types of markets because we have this instantaneous access to information, you've got algorithms that are basically parsing everything from daily Twitter comments to Instagram posts to Robinhood trading, et cetera, and then they're all making portfolio allocation decisions in nanoseconds based on this whole flow of information and sentiment and everything else is going on. That that discount factor for logic is no longer really introduced into the system. And then on top of that, you layer on top of this the what do you call it? The mindless robot
The
of the
giant
ETF,
mindless robot, yeah,
yeah,
passive
of the
capital
ETF
flows. Yeah.
investing. So look, just a good example. The S&P is up 60 bips right now as we're talking here on Friday morning. So that means that everybody buying an S&P index just contributed 40 cents or 40% of that 60% gain went into Apple, Microsoft, Nvidia, Google, Tesla, right? And this is the thing that people just don't grasp. So, and again, you're trying to apply a logical standard to the markets that are no longer driven by logic and fundamentals because of ETF and passive investing in general, but also because of algorithms and everything else. So, this is why the bears have consistently been wrong for so long. And, everything they say is all based, look, their arguments are very logical. And we certainly, view those arguments. We certainly, take those arguments into account. We pay attention to that. The articles I write on the website, like this year, it's like we wrote Curb Your Enthusiasm at the beginning of this year, talking about potentially lower returns this year because of fundamentals and valuations. But all the things that bears kind of keep talking about in general is like, oh, this is going to crash, this is going to happen, and you're going to lose 50% of your money, maybe someday, but the big driver of that is considering that now that ETF flows make up more than active manager flows, you've got to still answer the question of what's it going to take to get all these average retail mom and pops that are putting $50 a month into an S&P index fund to stop doing that and to sell them, more importantly than anything else, because we didn't see that happen in 2022. You had the best setup in the world for a market crash in 2022. And people were buying that S&P index all the way down. There was this FOMO to get in. There was FOMO earlier this week. Did you realize that this week you had the largest surge into ETFs, equity ETFs, and single stock equities, by the way, this week by retail investors? The largest surge, $8 billion this week, largest surge since 2021 when we were sending checks to households.
So was that a reaction to the DeepSeek thing, or was that just coincidental?
That's buy the dip.
Okay, so it was direct. It was a buy the dip.
Yep.
So I hear you, and it depresses me. But hey, the markets don't care about what I think. I was sort of smirking a little bit as you were explaining, because the mental picture that was coming to my mind is, you have two historically, relatively equally matched boxers in a ring, right? The bull boxer, the bear boxer. And the bear boxer is trying all the usual combinations and, okay, this is the time the bull should be weakening. I'm going to try to hit him here at his weak point. And it's not working. And it has been working for a good while. And I think the reason why is because, after every round, they send the fighters back to their corners. And in the bull corner, the bear corner, he's getting the Vaseline and the ladle of water. In the bull corner, he's getting shot up with, methamphetamine and cocaine, right?
Right.
So, he just comes back wilder and stronger than ever. So obviously, I feel depressed because it doesn't feel, super fair. It doesn't seem, to be giving investors who actually look at fundamentals and analyze markets a fair shake. And again, the markets don't care what I think. But here's a question I was trying to ask, and then you can answer however you want, which is, so why don't we, if it really comes down to passive capital flows and liquidity, we talk about Michael Howell and his work, why don't we just have at the top of every Wall Street Journal, front page, Yahoo Finance, whatever, a chart of net liquidity flows and a chart of what's going on with passive capital flows into, retirement funds? If those are the two things that really drive everything, why don't we look at everything else? Why don't we just look at those two things and say, okay, you know what? It's a captured market. They're, they're distorted by these capital flows, so they're the only thing that matters. So let's just watch those.
Because if you did that, you would ruin the casino, right? If you take a look at what's going on in the markets today, we no longer invest. All we do is gamble. And this is the capture of that, kind of the whole mentality of investors in general. It's all about, I don't need to save money. I can just buy, stocks or Bitcoin or whatever it is, and it'll earn me a lot of money because it's just, I can go to Vegas and win by just betting in the markets. And we talked about the risk of it. Mike wrote a really good article earlier this week talking about meme coins, and they basically they don't create wealth, they transfer wealth. And it's a really, really good point that he makes in this article, because what kind of fascinates me, and I watch my kids in particular, and I watch what they do on social media, and watch what they do on, kind of, and how they're kind of and I have lots of very hard conversations with them.
And then do you wash your eyes with soap after you
Yeah,
watch
yeah.
it?
It's really difficult, because it's such a different mentality mindset they have, because they see what they see on social media and they go, well, I've got to buy this, because if I want to have that type of lifestyle, I've got to buy these type of things, right? And I'm like, no, 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 that's not the way it works. Here's another fascinating thing is, like, there's the whole people generating careers, very viable careers on the internet, by streaming a video game, as example. So they play a video game and they basically have a YouTube channel where people are watching them play a video game, and then people send them money for watching them play a video game. Now, this is a really good base case of how we transfer wealth in the economy, because now I just gave my money that I worked for to somebody else to watch them play a video game. And look, I'm not bashing that at all. I'm just using this as an example because it's one of the most fascinating things to me, because I would never do that. I work too hard for my money to send money to somebody else. But they do this, kind of like tipping a waiter or whatever it is. I watch your video stream, so here I'm going to pay you money. So I'm transferring my wealth to theirs. Meme coins are a lot that same way, right? So the creators of the meme coin, they put the coin out, and then basically, which has no utility or purpose. It's just, I'm putting this coin out, you buy it. So you transfer your wealth to them. They now have your wealth, and you're just hoping the price goes up and that you'll sell it somewhere, kind of at some level, but you never do. And then this thing crashes and you lose your wealth, right? And we've, Fart Coin and Hookah Coin and all these other ones we've talked about in the show. But these are all functions in the economy now. If you look across the broad swath of the economy, we have a lot of platforms now that are simply wealth transfer mechanisms. Everything from meme coins to OnlyFans, right? We're just transferring our wealth and that we're not getting a product in return other than maybe entertainment. So we're getting an entertainment value for this, and we're transferring wealth on a weekly, monthly, quarterly basis, however we're going to do it, however we pay for these subscriptions. But this is why so many Americans don't have any money, and they can't invest and participate in the markets, because they have so much of this transfer going on in their system that it's depleting their ability to grow their own wealth, because they're transferring it to other wealth creators. And this is one of the things that we talked about in today's article on the website about bullish exuberance of small businesses and CEOs. We're transferring a mass amount of wealth to these companies, Google, Microsoft, for products and services, advertising, paying for influencers, all these type of things, because we like this stuff. And right, so social media, I'm watching this influencer, so my wealth gets transferred to them. When I buy a product, the influencer makes money. I get a product for whatever they advertise for. But I'm not making anything on top of that, right? I'm just transferring my wealth out. So I'm not building any wealth. And this is why we keep seeing that growing gap between the top 10% of income earners, who have the majority of, have 88% of household net worth, 90% of the market share in stocks, versus everybody else at the bottom who are just living paycheck to paycheck. It's quite fascinating.
So it's fascinating in a really morbid way. And I've got some stats here about the weakening consumer that we'll get to in a little bit. As I hear you talk there, Lance, I agree with everything you're saying. And, I'm just trying to think, like, what advice would I give people around this, right? And what's coming to mind is, there are behaviors that I've adopted over the decades that are simple rules to protect me from myself, right? That have really helped, right? So to your point, like when you think of social media consumption, yes, you can use it to educate yourself, make yourself smarter. I hope that the people who are watching this video believe that they are getting what I like to call financially nutritious information that will actually help them improve their future prospects. But so much of social media consumption is this sort of empty calorie entertainment that you're talking about, right? And so, like, in my life, I realized, I don't know, 15 years ago, that, I just shouldn't drink calories, right? That like there's a lot of drinks I have that just have a lot of empty calories in them. I'm not getting enough benefit from the calories to make up for the impact it's having on my health or my weight or my fitness. And I basically just said, I'm just not going to drink calories. So I pretty much just drink water all the time. And yeah, a little boring. And I've had to, really become a connoisseur of flavored sparkling water just to kind of keep things interesting. Um,
You do.
you got yours right there. Um, but it is made a that made a pretty notable difference in just being able to weight management, right? And some other health issues. Same thing with credit cards. I don't use them. I could. In fact, I get a lot of people that tell me, "Oh, you're missing out on so many points and stuff like that." And yeah, I probably have missed out on a couple of free, flights to Hawaii or whatever. But the discipline, the pitfalls I've avoided because I've just said, you know what, I'm not going to put something on plastic. I'm just going to save up for it and then pay for it if I need it, has really served me very well. So where I'm going with this is I think maybe one of my bits of advice to people here is just, you know, give yourself some real guidelines about your social media consumption. Just say like, I'm not going to watch it, or I'm only going to watch it for educational stuff, right? And yeah, it's probably going to be a hard transition. Everybody's gotten so addicted to it and used to it or whatever. But that's probably one of the single greatest life enhancements you could do, both in terms of quality of life, right? You're not comparing yourself to everybody's perfect lives and all that stuff, but we won't be participating in this value transfer that you're talking about. So, you'll be saving more of your money and not just giving it up for ephemeral, in the moment entertainment that you're going to forget about in 2 nanoseconds anyways.
Well, no, and look, this is the conversation I have with my kids all the time is that, you know, on social media, you have all the knowledge in the world really available to you. And for instance, you go to TikTok as an example. At the top of TikTok, you have your following tab, your For You page, and then it has a STEM page, which is basically all your education stuff. Well, we watch baby ducks and goats, mini goats, right? Because that makes us happy. But we could be using that same amount of time to learn something about math, science, technology, and advancing our careers, becoming more educated. But we don't do that, right? Because that's boring. You know, people that watch financial videos on a Saturday, you're a rare breed. There's not many people that will actually do that. So if you're willing to take that information in to help improve your financial capabilities and improve your education, then you can start talking about advancing your career, starting a business, doing all these other things. But we want to point. This is my problem with everybody that wants to point fingers at capitalism and say, well, capitalism's not fair. We've got this big wealth gap. You and I had this debate, last Friday, about this whole wealth gap issue, and now it's not fair. And it is fair because the people that are taking advantage of the opportunities of education, information, and taking advantage of that, taking on the risk to do something about it, or sacrificing something else to enhance their wealth, they're participating in that system. The vast majority of people don't. And so they overspend, they go into debt, they live a lifestyle they really can't afford. They don't take the risk to build that. They don't put in the time and effort to enhance their education. Then they just want to complain why, life's unfair to them. But this is what we always go back to, is that we've got to look at ourselves and say, are we playing the victim here? And do I have the ability and the fortitude to make a change? And we all do. We can all make that change. We can all start doing things to create wealth for ourselves and our families. But there's no quick fix. I get all these emails from people going, I've got $10,000. What can I do to make this? I want to retire. What can I do to get there? The market's not going to do that for you. Unfortunately, the media tries to make you think that'll work, but it won't work. The only way you're going to get there is to save your way to wealth and invest properly and let the markets help you build that wealth. But the market's not going to do that work for you. If you treat the market like a casino, it's going to treat you like a casino as well, and it's going to take all your money from you.
It's going to take all your money, yeah. So agree with everything you're saying, and I don't know if you've seen it, but there's a comedy special on Netflix where I can't remember the comic's name, but he's an Asian comic. He's from Asia, and he's talking about his American friends. And he's talking about, the discrepancies of, America versus the rest of the world. And he's like, they're all so pro-America. Yeah, America's great. America's the best. I love my country so much. I'll die for my country, right? And then he's comparing, the STEM scores between, his home country in Asia, which are great, and how terrible they are in America, right? And how America's prospects are fading because nobody's learning in STEM. And he's like, yeah, I kind of don't get that. Like, you're willing to die for your country, but like you won't learn math for your country.
Yeah,
What
look,
actually sounds a lot smarter.
yeah, no, they just, it's a very sad situation. And look, I am a huge supporter. One thing that President Trump has talked about is getting rid of the Department of Education. I am all on board with that. That was the worst thing that we ever did starting in 1980 with the Department of Education. Ever since then, our educational scores have just declined. They just reported this week the national score for math was at like 28% proficiency, and for English, or for reading English, was like 32%. I mean, the scores are just absolutely dismal of kids who are coming through school because we don't teach them anymore. Because what the Department of Education pushed was, and look, I know this for a fact because my parents were both teachers, and both of my parents quit teaching when the Department of Education started forcing upon the schools that they had to pass X number of kids every year. So my dad was a biology teacher and a tennis coach, and he would fail kids all the time. They couldn't pass a biology test, and he was reprimanded by the school district that he had to pass X number of kids every semester, and he quit. He says, "I'm not doing it. I quit," and he went to work for Dow Chemical after that. My mom quit teaching English for exactly the same reason. And this was 30 years ago. And it's only gotten worse since then. But that's the result of this is the level of education that we've got with kids coming out of high school that have a intermediate or elementary school level of ability to read, comprehend, and do math.
All right. I'm sure you got a lot of people here that are hearing, commonalities of what they're observing in their own lives, in your words there, Lance. And we could go on this forever. I'm going to bring it back to markets for a bit, folks.
Let's get back to where we're supposed to be. Mark,
Yeah.
let me come back and talk about valuations real quick, because you made a really, really good point about valuations. And I was going to share this chart, and then we got sidetracked, so my apologies. This is some analytics on. I just picked NVIDIA, just an example, because you were talking about, we just are having this. We don't really take into account valuations. This chart right here is the relative valuation model for NVIDIA. It's currently trading at basically an expectation of its relative valuation at one of its lowest levels it's had like in the last 5, 6, 7, 8 years. It used to trade at about a 40 times relative valuation. We're now down around 10. If we take a look at the intrinsic valuation model, just another kind of way to look at this, it's expected, kind of growth rates continue to be very, very strong. And the EPS growth rate over the next several years is continuing to expand. Now, this is going to adjust over time, but the one thing we can't discount, and again, this is why it's important to make sure that we just don't make assumptions about valuations without understanding the drivers of the valuations behind the individual companies. The valuation of NVIDIA is not as extreme as a lot of people are trying to make it out to be because of the growth rate of earnings. Remember, valuations is price times earnings. Mm-hmm. And so if earnings are growing, and just as an example, this next year, earnings are expected to grow at 127% over the next year. And then the following year after that, they'll still grow at 50. So if I'm growing earnings even at 50% a year, that's a very, very strong growth rate that can support a higher current price level for the market. So my point is, I'm not arguing that NVIDIA is not expensive, because it is. But again, we kind of have to keep it in proportion with the underlying earnings growth of the company and what's driving that earnings growth.
So on that point, let me just ask you about Apple, right? Which has reclaimed the title of the what is it, most expensive or
largest market cap company in the world.
Largest market cap company in the world, right? So they, it's interesting. Apple stock kind of swung around a bit right after their earnings came out because a lot of the performance wasn't great, right? Like, you mentioned iPhone sales were weaker than expected. And I think what saved them is they had a slightly higher than expected revenue expectations set, which were still single-digit revenues. And my point is, this is a company that has hardly grown revenues in the
That's
past
right.
several years, right? Hasn't had a new innovative product, essentially since Jobs was alive.
Right.
And so, yeah, it's a massive cash cow, but it's hard to look at as a growth stock at this point in time. And yet it gets, these, well, you probably have the valuation metrics there at your fingertips, but it still very much seems to be priced on growth, even though it's not growing. How do you square that circle?
Well, no, no. Apple's a totally different story. Now we're long Apple in our portfolio because, again, a portion of our portfolio is allocated to the giant mindless robot, right? So,
Yeah.
you
And it's one of the poster child for that. Yeah.
it's the poster child of it. But no, it's absolutely right. If you want innovation in smartphones, you buy a Samsung, right? Apple, whatever Apple has, they're about 2 years behind whatever Samsung builds and innovates. So, again, so as you're getting new technology on the iPhone, going, oh, I love this new camera. Yeah, Samsung had it like 2 years ago. But that's the problem, is that they aren't growing earnings. And in fact, earnings growth, just as a comparison, sorry, we just talked about NVIDIA's earnings growth for the next year. EPS growth this year is expected to be around 20%. Next year is going to be 12% growth. And that's hard to justify, paying 30 times earnings for a stock that's growing at about 12%. But, this is, part of the, and again, we take a look, for example, at Apple. It hasn't really done a whole lot since July of last year. It's just been kind of a big trading range. It got very oversold going into its earnings announcement. So it announced earnings and it got a little pop, but it really hasn't done much lately. And really, as for the last several months, it's just really kind of been trading sideways for a large degree. And that's potentially the problem that we're now starting to get into, is that in order to drive Apple's price a lot higher, they're going to have to figure out a way to innovate and grow and bring something else to the market that's really going to start generating more iPhone sales, Mac sales, whatever it is. Maybe that's AI. They now, one thing that Apple would really benefit from is cheaper AI, because if AI is cheaper, when they integrate that into their systems, their operating systems, kind of across the board, whether it's the phones, computers, whatever else they come out with in the future, glasses, whatever. If they could get cheaper AI delivery, then that would certainly help their profit margins. But again, this, kind of the next innovation for Apple is going to have to be what they do with artificial intelligence, or whatever next batch of new products are coming to the markets.
Right, and it's going to have to be something that either makes them more revenue,
Mhm.
where you're paying for AI services from them. But again, that's one of the things that DeepSeek maybe puts into question, is that, well, maybe AI services are just going to be free going forward. Or it's got to be something that makes the hardware so much better that you upgrade faster from what you have to the new service, right? And maybe, but and look, I'll be super open-minded about this, but someone has yet to tell me, here's the AI service that's going to make me rush out and buy the new MacBook and jettison the one that I currently have.
Right. Well, no, and again, I don't have that answer either, and I don't know what the new technology is going to be. There'll be a version of AI that's free, probably, to the general public. It's not going to be DeepSeek, but again, there's just all kinds of art already, just in a week. It fascinates me, kind of how stupid people are in general. You remember when they were threatening to ban TikTok?
Yeah.
All these influencers ran out and they downloaded this other app called Lemonade, which is a TikTok duplicate, completely owned by China, and they gave all their financial information over to China for that. DeepSeek was exactly the same way. Yeah, of course they put it out free, because everybody ran out. I was like, oh my gosh, this is so cool. Download it on their phone. You're an idiot if you did that, because you just gave all your information to China. And now they have all that financial information, personal data information, everything they collected from you, and they've already been hacked. So, now that all your information is now out in the world.
In the world,
through
yeah.
their system. So,
And that's another reason to be slow in moving to all this stuff, right? Is you do not want to be a beta tester of this stuff for that reason.
Exactly.
So,
but look, my point is so really two things, about the future, is that part of this. And again, we keep thinking about AI in terms of the AI that we access and use for writing our high school, term papers or, doing a search on the web, that's going to be free, right? No matter how we come out at the end of the day, that type of AI is going to be very free. The other AI that is going to be used across healthcare and engineering and all that other stuff is going to be the moneymaker. That's where the money is going to get built from. And that's going to cost money. And again, the big difference between DeepSeek and say ChatGPT or Llama, which is the other open source model through Meta, the big difference is that DeepSeek's about 90% accurate and versus Llama, which is a lot more accurate. And there was a report out yesterday, had some really great stats about the inaccuracies of DeepSeek. But, yeah, if I can get a 90% answer for a high school term paper, 90% still gets me an A. But if I'm having AI read my radiology results to see if I have cancer or not, I really don't want a 90% answer.
Right.
Right. So that 10% can make if AI is helping me build a building, a skyscraper out in California to make sure it's earthquake proof, I don't really want 90%. I want 100% accuracy. So that 10% can make a huge difference in outcomes, in places that it really matters.
It can. And look, I agree that AI is going to be transformative in many ways in the long run and all that stuff. I'm not anti-AI, and there will be lots of value unlocked by it. And I can certainly see that on the cost saving side of making things more efficient. I'm with you there. They're going to be applications of this that'll be big revenue generators for a number of industries. But and again, I'm not a technologist. I'm just asking the question here.
Yeah.
One of the things about DeepSeek that shocked the world was how good it was for a 1.0 version that just got dropped, right? Right.
Well, the problem was it was 3 times more biased than Claude. It was 4 times more vulnerable to generating insecure code than OpenAI. It was 4 times more toxic than GPT 4.0, 11 times more likely to generate harmful content than OpenAI's Q1, and 3.5 times more likely to produce chemical, biological, radiological, and nuclear content than OpenAI or Claude, either one. So sure, yeah, it operated great.
But okay. And I don't have an article in front of me with the good stats here, but we've had a week for the world to bang on it, and there's been a lot of people who know a lot about this saying like this thing was scary good for something that was on 0 of our radars that's offered as free open source the world, right? So the question is how much better is it going to get? And I'm not thinking DeepSeek is going to eat the world, but I think what it's saying is hey, look, these AI platforms can be a lot more efficient, cheaper, ubiquitous, whatever, than folks imagined up until 2 weeks ago, right?
Yeah, possibly.
And it's going to potentially, open the door for a lot of other people to grab the innovation in terms of the coding, because essentially what DeepSeek did is it said, look, we're not going to win the war on hardware, right? The brute force getting the most expensive processors to get the best answers. We can't win that war. So we're going to have to win on software. We're going to have to get a lot more creative with the code that we write. So there's a lot of innovation in the software coding, which is now available to everybody because they open sourced it. So people can start playing around with it, right? And where I'm going with this.
By the way, remember, Llama is also open source. Yeah. And Llama is much more advanced than DeepSeek. And we're all focused on DeepSeek, but we're forgetting we already have an open source AI.
Right.
That's actually much more advanced than what's happening.
What is Facebook's expectation for CapEx for Llama versus what presumably it took them to make DeepSeek, right?
Well, but see, this is the whole thing we don't know, right? So the initial claim was they built this for $5 million, which is absolutely not true. That was only based on the number of training hours they used on the GPUs, but where'd they get the GPUs? So if and look, there's some facts here that nobody knows for certain because this was all done and there's an article out today talking about how they went around the export ban to get the chips. Yep. But it's presumed they used somewhere between 10 and 20,000 GPUs to build DeepSeek. So if you just say, let's just split the difference, call it an average of 15,000 at 100,000 a piece for the GPUs. They spent $1.5 billion just in GPUs to build this. So CapEx, don't think it changes much. And plus, another article, OpenAI was out this week and said, hey, DeepSeek's great. They just ripped off everything that we were doing in ChatGPT and used it as their base model. So they really didn't develop anything.
Sure, but
they just ripped it off.
If you're
Yeah,
OpenAI and you were hoping to go public, they just nuked your business model, right?
not really. No, not really. And look, OpenAI is still going to go public, and OpenAI is going to take this information and they're going to incorporate it. So,
I
again,
guess, but
but
what's going to
all they
prevent
did,
them?
all DeepSeek did was basically just advance everything else that OpenAI and Llama's doing and bring it forward by about 2 years.
So help me understand this though. And again, I know there's a lot we don't know, and neither you or I are
Yeah.
technologists, but how is OpenAI going to continue to charge as much for what they were hoping to charge for their services going forward if you've got a competitor that pretty much seems can just copy what they do and make it available to the world for free?
Well, you first of all, you start locking down what you're doing so they can't be copied, right? Which
Easier
is,
said than done when it comes to
well,
software, but
yeah,
okay.
but it's right. But that's going to be the next innovations. Don't be surprised if within the next 3 to 6 months that DeepSeek is banned.
Yeah,
Because
probably.
again,
But
yeah,
again, someone else can post to open source overnight. That's
sure,
the problem with
absolutely.
software. It wants to be free, right?
Llama's open source already. So that's already out there. See, we've already got an open source out there.
You got
There's
but
tools.
here's where I'm going with this. And this
Yeah,
this
yeah,
may be an imperfect analogy, but like, I worked at Yahoo. I remember this actually how I knew Brad
sure,
Garlinghouse. He was running Yahoo Mail at the time. Um, you know, the big email providers were planning on making all their money off of email on storage, right?
sure.
So we had this service called Yahoo Mail Plus, right? You got a small amount of free storage. And then if you wanted to keep your emails beyond a certain date, you had to upgrade to Yahoo
Right.
Plus, Mail Plus and get more storage. And get, other things too, anti-spam and stuff like that. And there became these sort of storage wars. And I remember the day distinctly where Google just announced, you know what, Gmail is going to have unlimited free email storage. And they just like, with one announcement, they nuked this entire planned revenue stream for Yahoo that Yahoo had planned out, right? And
Mhm.
every other email provider eventually had to go to free unlimited
Sure.
email storage.
Right.
And my
So,
point here is not that I
great.
think DeepSeek's going to eat the world, but you could have this
Yeah,
proliferation of really good free AI out there.
absolutely. No, you're absolutely going to have that. Absolutely going to have that. Doesn't mean you can't make money off the system. And
Doesn't mean
then,
you can't make money, but you may not be able to make as much money because you have all
no,
these good enough free things
whoa.
out there.
Back that truck way up for a second because Google proved you wrong right there. Because everybody said back then is like, oh, if they do this, they're going to lose all this money. Google's now one of the largest revenue generators in the world because they created all these products that came after it that generated revenue. The AI chatbot stuff that we're all playing around with right now, that's a drop in the pond. That was always going to be free. That's always going to wind up being free. All the product development that's coming after this, all the things that it will integrate into in your life. Think about Google as a good example. Yeah, I get free email from Gmail, but if I want to store my pictures, my photos, all that type of stuff in the cloud beyond 100 megabytes or whatever it is, because I pay for a service, I've got like 2 terabytes of storage. But all my spreadsheets are all stored in the Google Cloud, right? So, but I pay for that every month. I pay a
Look,
fee
there
for
are
that.
other services. Yeah, no, I get it.
Absolutely. And so what you're trying to say is that the entire AI model is hooked to this, basically a search function looking for data on the web. That was always going to be free. All the other products that get built off of this is where the world is going to go. And that's where the money is going to be made. Again, I wrote an article on Tuesday. It's on our website called Is DeepSeek the Next Sputnik Moment? Because if you go back to the 50s and the 60s, the stuff that we were doing in the 50s and 60s for the space race to put a man on the moon is now your cell phone, your microwave oven,
Right.
your internet, all of your computer that you use, all that came from the space race in the 1950s and 60s. And that's the same. This is where we are. We are just starting to send the first test rocket up into space in terms of cyberspace and going, okay, I think we might be able to get somebody into space, much less get somebody on Mars. We're so early in this phase. The revenue generation that's going to come from AI is going to be absolutely phenomenal in the future.
Yeah, and look, I don't know the answer to this question, but if you look at the top 10 companies, by market cap at the start of the 50s, they weren't the same ones at the start of the
Right.
60s or the start of the 70s, right? This technology,
Absolutely.
built upon itself and great new innovators came out and stuff like that. And all I'm asking here, and then we're going to move on because we're running short on time,
Yeah.
is there was some expectation of total revenues that AI was going to generate for these companies going forward 2 weeks ago. Somebody somewhere had a bunch of spreadsheets that said, okay, this is how much we think we're going to make from these guys. My question is just, does the potential now proliferation of free open source AI models, I'm assuming it's not just going to be DeepSeek, it's going to be others that proliferate. Does that eat into that total amount for the Magnificent Seven, right? For the Mag 7.
Right. But maybe for the Mag 7, yes, that's entirely possible. But for the AI revenue generation in total, so for instance, right now, the only people
you've already got me sold here. This is a catalytical event that might even grow the pie of AI revenues over time.
Right. Yeah. That's the point.
My question is more about the Mag 7 that is currently supporting everything, right?
No. I agree with that. It could definitely change. Look at it this way, real quick. 5 years ago, NVIDIA was not in the Mag 7. Tesla was not in the Mag 7. Maybe a little longer, 7-8 years ago. Tesla wasn't even on the radar 10 years ago. And now it's in the Mag 7. So the number of companies that are in the Mag 7 10 years from now are not going to be Apple, Microsoft, NVIDIA, Google, Tesla, probably. It's probably going to be 7 companies we've never heard of that are all some form beneficiary, et cetera, of AI.
Okay, so last question around this then. So let's assume for a second that's the case. Torch gets passed to new companies. What do you think the odds are that Torch can be passed gracefully from a rising market cap standpoint versus you have some creative destruction that brings down the leaders, market corrects for a bit until the new crowd grows enough to replace them?
I think you've seen, look, again, in the last 15 years, Tesla and NVIDIA are now in the Mag 7 without a major catalytic event.
Okay.
Right. They just outgrew everybody else. It could also be a function of, I fully expect at some point this market is going to have a 30 to 40 to 50% correction. That may not be for 10 years, but you're going to wind up into some type of, you're going to cycle from a secular bull to a secular bear at some point. Because of debt, deficits, GDP growth, employment, those type of things. We've got a huge demographic problem. I mean, we can spend the whole show on just talking about long-term economic trends based on demographics. We have a demographic problem that is going to lead to the next secular kind of bear market period in the markets. When that starts, who knows? It's not this year. It's not next year. It's probably not 5 years from now. It could be, but don't know when. But
on that one, let me bring in Chris Hamilton to one of our weekly market recap things here, Lance. He's the demographer who really follows all this data. It'd be so great for us to be able to ask him questions in real time and have him bring up his charts and let you react to them.
Absolutely, because it's not just a U.S. problem; it's a global problem.
It's a global problem.
Yeah.
All right, look, I'm going to be jettisoning so many things on this list, including, sadly, the jury duty rant. We'll have to do that some other week because
look, it's really easy to get out of jury duty.
There's some funny stories, but also some social commentary that I think is important in there. But look, real quick, Lance, and we'll have to go kind of the lightning round here. Powell, we had the FOMC minutes release. We had the Powell press conference thereafter. When I did my recap of this with Axel Merck, we kind of referred to it as sort of like a Seinfeld release for the Fed, where they just did their best to say as much as they could about nothing. It was pretty much what we expected, right? They paused. Powell tried to kind of evade almost every question he was asked. Anything in particular you're taking away from this?
No, I mean, basically it's exactly what was expected, right? The Fed was going to pause. Inflation has remained a little bit stickier than what they expected, but that's still because we have a lot of federal expenditures coming into the economy. Just in the last quarter, we had about a 7.5% increase in federal expenditures that's supporting economic growth. So, but economic growth is slowing. Employment is not nearly as strong as headlines suggest. Right? You can see that in full-time employment versus, the working force, the labor force population. So, most of the jobs created are temporary jobs. Look at University of Consumer Confidence.
And government jobs, which they've just put a hiring moratorium
huge, on. Yeah, a lot of those have been government. So all that's about to come forward. Consumer confidence in terms of 1 year forward expectations of incomes dropped. I mean, literally fell off the cliff. So, the underlying dynamics of the market certainly don't support that. And real-time rent inflation is coming down rather sharply. So all that's going to feed through inflation. And that was what Jerome Powell said in his presser like 5 times. He says, no, we're still expecting to get to our target. It's just taking us a little bit longer to get there. And that's why the market rallied over the last 2 days. Bond yields have been rallying as well because everybody's starting to see that number. And the GDP report on Thursday, the PC report on Friday, all fed right into that narrative.
Yep. Yeah, and just to note on the GDP report, it grew a little bit slower than expected in Q4.
Oh, no, it was a huge drop. We were at 3.2% expectations on Wednesday. Thursday morning, it fell to 2.3%. You had almost a full clip off because of the trade deficit, which had an increase in exports and a very sharp drop in imports. And if you're dropping imports, 59% of corporate revenues come from imports. So if we're importing less, that's a sign that the economy is slowing down. At the same time you had that, you also had manufacturing drop-offs as well. So again, you had 2 big indications that just took a big bite out of GDP growth for Q4 coming in right at the last minute.
Okay. All right. Let's see what else here. Hey, real quick, I just forgot to note, but the reason why we dug so much, or at least I dug so much into DeepSeek with Lance here, was one of the questions I wanted to ask you, Lance. We don't have time to really get to it in depth, so just give me your 1-sentence answer.
Yep.
But was, is DeepSeek a black swan, right? And I think right now we don't know. We've already discussed the potential implications to death, but it does, in one sense, it could meet your definition of a black swan, meaning you think that if there is a black swan that forces some sort of market correction, it's going to be something that was on nobody's dance card. And that was sort of a good example of something that nobody expected, right? Came out of the blue.
But now it's now over, right? So now
it's now over. It's now priced in to the extent we understand it.
Absolutely.
Yeah. I'm not. Yeah.
But yes, no, but that's exactly. But no, when we talk about black swan events, that's exactly what it has to be. Something out of left field that nobody was thinking about, right? And now it's already been parsed into the market, so everybody's already passed it. But that's the thing you really got to be careful of. Before we leave, I have to share one visual with you.
Okay. We're not done quite yet. We got to get to your trades, and then you can show your visual. Again, so we were going to talk about both the weakening jobs market, and we'll have to bring those stats in next time. But basically, it does really seem that the job market continues to cool. Powell himself basically said, we don't want to see it cool anymore. He's still trying to say that everything's normalized and fine, but one of the reporters did get out of him. He was like, yeah, I don't want to see the job market cool any further from here. So as you and I talked about,
the jobs market is cooling.
And it is cooling. Oh, no. And that's, I'm about to go, this interview I'm going to do with Danielle is totally focused on that.
Yeah.
So as goes the unemployment rate, so goes the economy. We've talked about that many times. The consumer does continue to weaken. Just a couple of quick things about the consumer. One, there was a new report that just came out of it was of workers. So these are people who have jobs. Only 6% of them reported that they're making enough that they're able to save for retirement. Thought that was a shocking stat.
Yep.
Headline here: inflation storm leaves Americans more reliant than ever on food banks. Again, showing that the bottom 80% is continuing to take their lumps. And even on the luxury side, Swatch profit sinks 75%, and LVMH is continuing to show weakness among their luxury brand lines. So, we're beginning to see the high-end consumer that's been really keeping the average consumption averages steady. We're seeing some cracks in there too. I'll just leave those stats for now. We can come back and talk about them in greater depth next week. Last question for you before we get to your trades, Lance. It does seem that President Trump is going to go ahead and apply tariffs to Canada and Mexico. Mm-hmm. And he got his little proof of concept fight with Colombia done over the past couple of days. Are you expecting any immediate material impact one way or the other to the economy and markets from those?
No, look, he may apply them here temporarily. He's got some point that he's trying to negotiate, but likely that'll get negotiated and resolved. And look, we've still got tariffs on China from his first term in office. So again, the market will adapt to those pretty quickly. And again, don't forget the most important thing about tariffs. While people typically go, "Oh my gosh, tariffs lead to inflation, higher prices," the biggest driver of inflation is consumer choice. So if oranges get a tariff on them, I'll buy apples. And so consumer choice will mitigate any impact of inflation from those tariffs. Exactly what we saw from China as well with those on during its first term.
Yep. Okay. All right. So trades. Crazy
None this
week.
week. Yeah, no, it's crazy week. We didn't need to do anything. The portfolio did really, really well this week. We outperformed the benchmark every day this week so far.
Congratulations.
Yeah, it's been really good. But again, it's all due to the diversification of the portfolio. We didn't have massive overweights in certain positions that crippled the portfolio. Our dividend equity model did exceptionally well this week because of the way it was allocated and balanced, and it caught that rotation in the markets from kind of the beta kind of mega cap beta growth to the more dividend value oriented stocks. So it had a really, really strong week. So again, all of our portfolios are trading at all-time highs right now, valuation wise. So like I said, it's been a great week. So no trades were needed.
All right. And how would you sort of describe your positioning right now? Are you just sort of in wait and see mode? Are there certain actions you want to take that you're just waiting for conditions to get right? Oh, we didn't even pull up the TA. We don't necessarily have to, but is there anything about oversold, undersold you want to mention?
No, actually, we're on technical analysis wise, we're kind of just in a good spot, right? We're not really overbought on indicators. We're still in a good, strong buy signal. One thing I've been talking about a lot in our daily market commentary this week is about money flows. If you really want to know where the markets are going, pay attention to money flows. And money flows have been very positive. Even during the whole DeepSeek thing on Monday, money flows were positive. So again, that just tells you that whole event was going to be very short-lived, and because buyers were in the market Monday morning at the open, they were buying stocks and buying the market. So again, that's pay attention to money flows, tells you a lot. We're going to have a correction at some point. I would expect that probably as we get into February, we're going to get a little bit more volatility. Could see generally the last half of February tends to be a little bit weaker. So probably in our portfolio, we'll probably reduce NVIDIA on a rally. Again, pull it back down to it's probably an underweight position overall. That's probably going to be dead money for a while people are trying to figure this out. But again, if the CEO of the company comes out during earnings and makes a really strong statement, that stock's going to be up very sharply. So again, that's okay. We can participate with that. But if we reduce the position and then he says something like, "Oh my gosh, DeepSeek pretty much just ended our model," the stock takes a hit, it doesn't hurt the portfolio that much because we'll just be underweight that position. So we'll probably do some mitigation work just to hedge that potential risk. But right now, everything's doing just fine.
All right. Well, look, folks, if the fastest way in your life you can get to everything being just fine is to continue watching Lance Roberts on this channel week after week, let him know that by hitting the like button, then clicking on the subscribe button below, as well as that little bell icon right next to it. As always, if you want some help in navigating the road ahead here in 2025, if you don't already have a good financial advisor to lean on to help you do that, and you'd like to get some help from a good one, perhaps even Lance and his team there at Real Investment Advice, they consider scheduling a free consultation with one of the advisors you see on this program with me every week. To do that, just go to thoughtfulmoney.com, fill out the short form there. The advisors will be in touch with you right after that. Okay, folks, very importantly, we've got the Thoughtful Money Spring Conference coming up fast. Again, that's going to be Saturday, March 15th. The faculty for that continues to build in ways that are just so exciting. I've had a number of folks recently say that they're interested in coming and joining and participating. The latest one, which I'll announce here, is Sven Henrik. So we're going to have a TA section this time. It's going to be Sven Henrik going through a boatload of his charts. We've got Lacey Hunt, keynoting it. He's going to have a ton of charts as well. We're going to have Darius Dale with a ton of charts there. We're going to have Michael Howe with a ton of charts there about liquidity. So this is going to be a Chartapalooza conference. We also have Luke Groman. We've got Brent Johnson. We've got Melody Wright about housing. We've got Stephen Bavaria about income investing. There are probably 5 or 6 other big name folks that I'll be announcing over the coming weeks. I say every time, this is the best faculty we've ever had. I think we're going to raise the bar even higher. In fact, I'm sure we're going to raise the bar to a new high this time around. So stay tuned for some other big announcements there as well. But most importantly, run, don't walk to get your tickets so that you can lock them in at the lowest early bird price that we're offering. To do that, just go to thoughtfulmoney.com/conference. And a reminder, if you are a premium subscriber to our Substack, you get an additional $50 off of that lowest ticket price. All right, Lance, as usual, my friend, I'll let you have the last word.
No problem. I just wanted to share this one graphic with you because I'm a big fan of magazine covers. And of course, you know the old adage, right? When something appears on the magazine cover, that's probably typically the top or
Yeah.
bottom market, right? We've seen that with Barron's covers about markets. This was the Forbes 400 out today, the Forbes cover. And a guy did a great compilation of the Forbes covers that where people have hit the list. Of course, we'll see what happens with Michael Saylor and Bitcoin, but he's the Bitcoin alchemist that just made the cover of Forbes. I don't know what that means, but I just thought it was interesting.
All right. You're going to get us destroyed by the Bitcoin faithful right here at the end. Thanks for snatching defeat from the jaws of victory here, Lance, right at the last second. But we'll see. Who knows? Definitely the curse of the cover is a real one. So,
Yeah.
All right. Well, look, my friend, thanks so much.
Yeah.
Sorry I had to cut this one short. We'll make up for it next time, but I really appreciate your flexibility here.
Yeah. We'll see you next time.
All right, everybody else, thanks so much for watching.